Welcome to Markets Now. I'm Michelle Rook with Tomm Pfitzenmaier with Summit Commodity Brokerage. Well, we ended the day with a grain trade mix, corn and wheat lower, soybeans to the plus side, cattle were mixed, and hogs lower. And let's talk about soybeans first of all, Tom. We made new lows for the move, and then we did see kind of a bounce off of those lows. Was that just short covering or report squaring, or what was it?
Probably just evening up ahead of the report tomorrow morning. I mean, going, like you said, going lower, making new lows for the move, closing higher is certainly a positive technically. On the other hand, momentum and trend indicators are continue to point lower. You've got this big drag in the market on bean oil. Everybody for months now has been excited about the bean oil market because of the demand that's going to show up the last part of the year here for the production of renewable diesel. And yet that just has not happened. Bean oil didn't rally when crude rallied. Now crude has set back some over the last couple, 3 days. So that may have contributed to the weakness in bean oil, but it just really looks terrible technically. Now, if that could get its legs under it a little bit here, I think that would certainly be helpful for the soybean market. But, you know, we're probably roughly around 50% harvested in soybeans. And that last half of harvest is when we tend to put in the low in soybeans. So I think a lot of people are watching for that.
And the corn market was lower. Was the market pulled down by wheat, or was that just some harvest pressure?
Well, harvest is certainly a big part of it. And when you have a 2.2 billion bushel now, the average trade guess for that is 2.156. So maybe a 70 million bushel reduction from the September number. They are looking for a 0.2 of a bushel yield drop. But anytime you've got to carry out at 2.1 or 2.2, that's pretty burdensome, and it really makes it tough on the upside, especially with export demand struggling like it has been, and it's probably going to continue to. Ethanol, there's a pretty good story there because our ethanol production numbers are quite good. And margins are quite good, I should say. So I think there's a positive there, but we've just got a lot of corn and not a lot of demand for it. So I just think you're going to see December corn continuing that 470 to 495 range, and still something new happens here.
But the fact that technically we couldn't take out $5 in the corn market has not helped, has it?
No, I mean, you ran up against that 499, just stopped it dead, and you fell off right after that. So, yeah, I mean, the funds continue to have a short position, pretty substantial short position, which makes some people optimistic. If something positive happens, they'll have to cover that, and it'll generate a big rally, which is true. We just need that positive trigger to make that happen. And much like in the soybeans, this is the time of the year when we tend to put bottoms in. So, people are going to be watching that pretty closely.
And the wheat market saw those double-digit losses. Of course, we were up yesterday. So was that maybe just a little technical selling, or is that market still concerned about poor demand?
There's plenty of wheat around. The wheat demand is not great. You've got this whole mess over in Russia and Ukraine, which makes everybody a little apprehensive. There's enough wheat around. They're looking for an increase in the carryout and U.S. carryout and wheat in tomorrow's report of 45, 50 million bushel. So it's just hard. Again, wheat's probably stuck in that, I don't know, we're 558 where we closed, probably 545 to maybe up to 595. And I think we're just going to chop around in that range with wheat acting a lot like corn does.
But the funds are already short in that wheat market. And with an update yesterday, was it likely we just saw some profit taking too?
Yeah, if you're short and you're going in the report and you got a little profit, evening that up a little bit ahead of the report tomorrow probably isn't anything that should be a big surprise.
Let's move over to cattle, and we have corrected there quite a ways from the highs that we set here just a few weeks ago. Do you think we're going to see more consolidation in the cattle market?
I think you've got a little more consolidation. You could pull back another buck and a half on the December cattle contract. That wouldn't be a big surprise, down in that 182.80, 183.10, somewhere around in there. But this is the time of the year, again, the cattle tend to bottom out and work higher. The big question really on the cattle side, the supply side is quite positive. It's just whether we can sell the beef. Now, if you watch it very closely, you can see that the beef market has really been following crude oil and the stock market down.
Yep.
With people using those as an indicator of health in the economy. The consumer's starting to get a little tapped out. They've got their credit cards used up. They're starting to tap into some of their retirement accounts. So at some point, you worry that that's going to translate to reduced demand particularly for beef, since it's as expensive as it is.
And the funds have been liquidating their long positions, not only in cattle, but also a big part of their long in the hog market. Is there more downside risk? Are they going to liquidate more?
Oh, they may be liquidating a little bit, but I don't think much. I think we've gotten down to levels where I think you're going to start to see some buyers get very interested in both of those. Again, seasonally, they tend to work higher, and I think that's going to be a positive for both markets. So on another couple dollar setback on either one of them, I wouldn't want to get too bearish anymore.
Thanks for joining us, Tomm Pfitzenmaier, Summit Commodity Brokerage. That is Markets Now.